Hello traders, this is Ed. Welcome to Ed Traders YouTube channel. So today I want to give you a very important concept that can help you to get some sniper entries. So one of the first thing that I want to talk about is that when you're using this strategy, at least you have to ensure that the market is either in an uptrend or in a downtrend. The market should be trending. So first you have to confirm with the market structure that the market is trending by looking at things like either daily, a chart or 4-hour chart. Okay, you have to ensure that the market is in either an uptrend or the market is in a downtrend. Okay, or the market is in a downtrend. So after realizing confirming this, you have to now use some few daily candles in order to get your a few confirmation on whether you should get in or not. Okay, so this is it. You have first to ensure that in the bullish impression you have this number of candles 1, 2, 3, 4. You have 4 candles going up, and then this is after confirming that the market structure is going up. You have at least 4 candles there going up, and then you have a fair value gap there. When I talk about fair value gap, what do I mean? I mean this space here. Let me just reduce. My pen is too strong. That space in between there, that's a fair value gap. No problem. I know you can be able possibly to get it well. Yeah. Okay. So this is a fair value gap. No problem. I know you can get it. This space between this high and this low. That's too much. This space between the low of the third candle and the high of the first candle. This space remaining in between is what we call the fair value gap. Okay. At least the fourth candle have to come with the wick and tap this fair value gap. And also, it has taken the low of the third candle. Okay. It has also taken the low of the third candle here. So this low of the third candle has been taken and this fair value gap has been tapped. So, and then it come and close above like this. By seeing something like that, then you wait for the next day, okay? Which will be the fifth candle. You wait for the fifth candle to come in. And then as the fifth candle starts, because that fifth candle will start from this point here. When it starts, wait for it to come down to 50 below 50% or at 50% of this candle here. Okay? Then from that point, you will be waiting for the change in market structure in 15 minutes time frame. So you want to see something like at this 50%, you want to see something like this, the market going down to that 50% zone, and then in 15 minutes you see a change in market structure around this level here. Okay? Around this level here. Then the market move down again, okay? The market move like this and then move up. So that's where you are supposed to trigger your trade, around this level. Okay, so that's the strategy in itself. So that's for the bullish impression. You have to ensure that the market at least we have a fair value gap, and also the low of the third candle has been taken, obviously, and then as the next candle will be opening up, you wait for it to come to the 50% of this candle, come and tap. So in the 15 minutes you'll see it coming down, and then you see change of market structure, and then you go. So you can target this candle's high, okay, something like that, or you measure the whole of this candle and you target 100% using Fibonacci of the whole of this candle. Okay, yeah, so that's something you can do. So that's a strategy in itself. That's for a bullish impression. And for a bearish candle, looks like this. Okay, this for a bearish candle. So it's just similar to the bullish candle. We have 1, 2, 3, 4 candles. You have to ensure that this candle has tapped into this fair value gap, and also at the same time, obviously has taken the high of this candle. Okay, when it does that and end as a red candle like this, after confirming that the market structure is bearish in 4-hour or daily time frame, then you wait, because now the market will open at this level here. Let me remove everything. The market will open at the 50% of this candle. No, sorry, at the low of this candle. Then you wait for the market structure in something like 15 minutes time frame, for the market structure, the market to come up like this, like this, like this on the 50 minutes. Then we have a change in character, and then we move down. You target the low of this candle or 100% of this candle here. Okay, so that's a very simple strategy. Very simple strategy you can use to get an edge in forex market. So let's take an example very fast. Let's take an example. So let's look for Euro USD here. Let's check. Let's use something like USD card. Okay, let's check. So for example, if you use USD card at this market here, let's check an example of that kind of a candle here. Exactly, you can see. Okay, so you can see here we have a candle here. First, what do we confirm? We can see on the daily time frame, yes, you can see the market is going. But when you go something like 4-hour time frame, let's check. What can you see on the 4-hour time frame? On the 4-hour time frame, you can see that we have already we had this low. Let me just show you what I'm saying. We have the market having this structure: high, low. We have a high, we had a low, we had a high, we had a low. The market formed this high here, formed a low, and then we had what? A change of character. Okay, the market had broken the structure. Now we are going to the upside. Okay, this high was broken. Let me reduce the opacity. That's too much. Okay, the market has broken this structure to the upside and then retested. So now we are going up. Okay, so when you look at the 4-hour time frame, it's a bit cleaner. You can see the market is going to the upside. And then when you go to the daily time frame, above that zone, you can see that we have these 4 candles. So what are those candles? We have this guy, then this guy, then this one here, then the last one is this. So there are 4 of them. Okay, so in those 4 candles, 1, 2, 3, 4, what can you see? You can see we had a fair value gap here at the middle, and then this candle here had taken the liquidity of this low candle, obviously, and then it has taken the fair value gap. Okay, it has tipped into this space between the high of this candle, the first candle, and the low of the third candle. It has tipped into that space, and then from that point, which candle, which day will we be getting into the market? The 5th candle, which is this one. Okay, so if we open up this candle, we'll see that this candle is giving us a bullish impression. Okay, so let's just see that candle and see whether okay, try to clarify maybe what I'm trying to mean. Okay, let me show you that candle very fast. So this is the candle. Sorry, this is the what the market is supposed to do in that zone. Yeah, so this is it. Okay, just trying to shift it so that you'll be able to get it clearly. Let me move it. Okay, you can see everything. I've just taken a snip just at the moment so that you'll be able to see what's taking place. So this is the guy. When you look at it, you can see how this market moved. Okay, this is the entry day. This is the day that this is the 5th day. Okay, it is the 5th day that we are supposed to get in here. Okay, this is the 5th day. So the one of the things that you can note here is that the market came on the 5th day first and came to it came to the 50% of the previous candle. You see, this is the 50% line, 50% zone here. And then what can you see? After coming to that 50% zone, then we had a structure going down. Let me just note it. We had this high, we had this low, high. The market had formed a low here. You see? Sorry. You can see something minute taking place here. We had a high, low, high, low, high. This is a low here. You can see this king to the high. Then we had this low. Then the market had come to this level, had broken structure. And then you can see a lot of wicks down here. Okay. Then when the New York opens, you can see the boom, green candles to the upside. Okay. So where is the entry point? The entry point is supposed to be here. Okay. The entry point is supposed to be here. This is where you are supposed to get an entry. And then you target 50% of the previous candle, which is this candle, 50% of this last day's candle. No, not 50%, 100% of last day's candle is what you're supposed to project. Okay, 100%. So that's 100% Fibonacci of this candle here. Okay, or you can just decide maybe 1 is to 2. That's now up to you. The stop loss is below this swing low, and you go to the upside. Okay, and most of them, if the trend is upside, most of them will go swing most of the time. You'll see that they continue just like that, because this zone, you'll find that it's very difficult when the market has taken this low to come to the lower side. Okay, and if you look at this market, the safest stop loss point, if maybe that market you see it is going further to the swing side, will be this low. You see this candle that took liquidity and tap onto the fair value gap, this low here, it will be the best place to place your stop loss. Okay, in case if you are going swings, but if you are targeting something like 100% of this candle, then you just, because that's possibly day trading, okay, you'll just maybe focusing on this low, and then there we go. So this is it, guys. I hope you gained something. Thank you so much for watching the video. So ensure you subscribe if you have not subscribed to this channel. I will be bringing a very important concept and strategies for to help you be profitable. Thank you so much, guys. I'm out. Ensure you leave a like on this video. Okay, thank you so much. I'm out.